This is how to read market pressure with candles. You always have a buying side and a seller side. That means they're fighting each other. Just see it like that. That means the green candle shows you the buying side and the red candle the selling side. Long candles are pressure in that direction. For example, here you see a long green candle, and the green candle is longer than this red candle here. This means this can show us that also in price the market was going higher, as you see here, until here, that the market was going higher. We also have quantity of candles, as you see here, more green than red candles here in total, starting here after the market was going down. This means now market pressure is coming in for buying. We call when the market is going up long, and we call it when the market is going down short. So how can we identify this one here? This means first of all, it is always price. When you look on the right side, you have the price scale. Some people like to look at that, but usually I don't. For example, for me personally, it's just important that we see that the market was going higher after a specific amount of time, or lower, or just stays at the same price, what is not that good. You need always to know that there are these three things. The first one is that we see that the market is going nicely in one direction, trending. The second one is that it's consolidating and the market goes in one direction. And the third one is that the market is staying in a very huge consolidation. And the answer to this is always you want to see number one or number two. Once the market does number three, this is where a lot of losing trades occur. I'm going to show you all three things of these. So first of all, the length of the candle. That means you always need to compare both sides. That means here you can see, for example, one long red candle. But when you compare this to the green candles, you see here longer green candles in just like once is very important, and the other one is in quantity. In quantity, like these 7, 8, 9 candles, as you see here, this length here is more than just this one red candle, and also in total of this length here. Sometimes you find this one long red candle, and this is going to be very long, longer than this one. But even though there's this long red candle, price was still moving higher. So we need to prioritize. The first one is price, the second one is time, and the third one, for some people, love to use volume when it comes to trading, and this is the last thing. Just price, I think, is profitable enough to trade with, and time, and we're just going to concentrate on these two things. So a very good trick, by the way, is if you see 4 green candles and you see that the market did more candles as usual, as you can see here, it did this length. We always use the highest and the lowest wick here, as you see as reference. And when you just put it on the highest point and we expect the same length, you can see here how the market was doing the same length in the same direction. And this is called a trend. If you would trade this, it would be trend trading. It would not consider it as a reversal too much. Like literally, you have different kind of structures, and this is something what's very important to understand. Usually we only need 3 structures of it, but we have 4 of them. And when I talk about these different kind of things, we're talking about we have the last 5. For example, if you start trading here, you have around like last 0 to 5, 10, 15 candles, what is around in this area here. Then you have the last 20 to 50 candles around, what is around in this area here. And then you have also the last like 50 to 200 candles, what is in this area here to read. And then you have the last 200 to infinite. That means like all-time highs, last week the highest point, the lowest point, like these kind of things. When it comes to day trading, to trade time efficient, that means trading within 1 or 2 hours on the computer. The most important things are just like the most freshest one, the medium one, the last 1 to 2 hours. This is about like the last 50 to like 100 candles around-ish. It depends always on the market situation, because sometimes the market does less candles here and sometimes it does more candles here, what the market needed to make a specific move. That's why I mean time and price, what is very important. And then what is here on the left side, this is the least important thing, but it still matters when identifying market pressure. So you can see here that we have more red candles. And I just told you in the beginning that we have a buying and a selling side that is fighting each other. Just imagine it like that. That means people were selling here and they have a stop loss on the highest point when it comes to the bigger structure. That's why in a lot of videos I'm talking about bigger structure highs and bigger structure lows, because it's sort of a fight. Because you need to imagine you have here the highs that looks like this. People are selling here. Everywhere where you see a red candle, people are selling. Usually when somebody is selling, somebody is also buying in the same time. The thing is just you have an aggressor and you have a passive person that is buying or selling. And an aggressor is always the one who's moving the market. That means if you see a green candle, it means there are more aggressors in buying, but the same amount of people who were buying were also selling, but passive. Only the aggressors can move the market. When somebody's buying, somebody must sell. And sometimes we're really thinking like, if they're down here green candles, like who would sell down here? This would be really crazy. Or who would sell up here? And really there's a very big answer. There are people, they're selling here everywhere, but they want to make money, and literally they don't care if the market is going more higher. They make money when the market is going way more lower in the next months or even in the next years, for example. So there are also people, for example, they're pre-ordering things, or just like other things like banks, or just like going out of a trading position, like they still need to sell. So everywhere where you see, so I just want to say that when somebody is buying, somebody is also selling, and when somebody is selling, somebody is also buying. But there's an aggressor side that is moving the market, and the passive side is just also hopping in and is accepting that aggressor. And just to make it so simple as possible, if you have a green candle, it just shows you that the aggressor side within 1 minute in this case, because this is a 1 minute chart, the market was going higher. And if you see 5, 6, 7 green candles, like here, for example, this shows you that you have more aggressors on the buying side. That means that the market wanted to go more higher. That means you see the buying side is winning, and we can expect that the market continues in a trend in that direction. So when you see here on the left side here, these highs, this reddish thing, what I was just drawing in, just imagine people were selling here because you have here lots of red candles. And when it comes to the bigger structures, we have here those highs. This is where people have their stop loss. The smaller the structure, like down here, for example, the less money they're going to use. But the bigger the structure, like up here or here, this is the more money people are going to lose. And when you just look this from this perspective, from very bigger structure, that means I'm going to make this here a bit more smaller. From the very bigger structure perspective, it would look something like this. Up here, most people will lose money because a lot of people sold everywhere here, and most people will have their stop placement here. And this is what the market is targeting for. Then you see here now a lot of green candles and the market is going higher. That means you have here the buying side. And just imagine on this buying side that you see here, lots of people have their stop losses now here. That means if the market goes there, people will lose money. And now, actually until, let's say just until here, you will find both sides sort of in a fight, because you have those persons who just bought here very aggressive, a lot of green candles, and you have here a lot of people who sold and have their stop losses. And now it's really about where the market wants to go. Does the market want to aim for these highs? That means 1, 2, 3, 4, 5. Or does the market more wants to go here, back here to A, B, and C? And the thing is, sometimes you see a ripple effect. And this is really awesome by seeing a trend. You see here how the market goes to number 1 first, then it goes to number 2, then it goes to number 3. So now we can expect that the market goes to number 4 instead of going to A. So now you see a true trend. That means now you can expect where the market is heading right now from here on. And this is something that's very important when understanding market pressure. And then first, when you see that ripple effect, that it's going for highs or it's aiming for lows and it's like a domino effect, then we can use this market reading method about like, do we see that the market is more trending or consolidating going up? Here we see until number 3 that the market is trending going up. Sometimes you can see it very live, like after the market was going to number 1, that it wants to go to number 2, number 3. And then to trade to those references before the market is touching them is really something what I absolutely love. But then you see here now how the market does here a lot of candles, and this is where the market is going in a consolidation phase and still trends up. So there's an indicator that is called the anchored VWAP. You find this on TradingView on the left side. It's totally free. We place it on a bigger structure low, like here, and this will warn you and tell you, always place it, by the way, please, on the bigger structure lows. That means where people have their stop loss, like here. We place it there because from the bigger structure perspective, it shows us exactly where investors want to buy back. That means once the market is going here, we want to see that the market does lots of green candles, and then it's about that maybe the market will continue to go up. So let's just see what happens, by the way, if the market goes back to our reference. That means we go here, and then let's just put the drawings away, and then here now. Let's just see if the market goes up. So now you can see here how the market does here now more red and green candles. It does also longer red candles, as you see here where my mouse is, instead of here those green candles. So you see that the market is still having pressure down, and this is something what is very dangerous. Something what some people think is that we have an indicator, we have a green candle, that's why we should buy here. But it's always to read candles like I'm showing here, I think. And then we place the anchored VWAP on the other point here, like down here. And we look then if the market is touching it here, does it do longer green candles than red candles? And you see here very obviously that the market here, for example, is doing a red candle that is longer than those green candles in combination even. And you have more red and green candles. You have that the market is going lower. We always concentrate on highs if the market is going lower, because those are people who put their stop placements down here. And it's very awesome for us also when we trade to place our stop placement also on the highs. And when buying, we concentrate only on the lows and not on the highs, also not the opposite side, where we can also place our stop placement, what is really awesome. A high is considered just as for with the bigger or smaller structure, as I just showed you, like it's like an onion, or just a green and a red candle, or red and a green candle from the smaller structure perspective. And when you see here, long red candles, this long red candle is longer here than even these two green candles in combination again, and you have here so many red candles, we can expect pressure down until you see here now lots of green candles coming in. You see prices going higher now, and an absolute favorite pattern what I like is a red and a green candle in combination with a red and a green candle that was going higher. Now we placed here the anchored VWAP, and you can see how the market structures here higher from here to here to here, 3 times by the way, right? So we want to wait until the market, we can see something like that. So when we see now that the market goes higher and goes now to, you see here from the structure perspective, seller persons have here their stop placement, seller persons have here their stop placement, and here from a smaller perspective, we want to see that the market is at least going up here, and then we maybe can expect a ripple effect up here or up here at least, and sometimes we find trades here. If the market continues to go down and goes here, where buying people have their stops, that means here, here, and here. That's just like trading right now. When we want to sell, we trade to those directions. So there will be traders who just sold here in day trading, and they will target for those lows. And there'll be people they are buying right now, and they're trying that the market goes up here, and up here. And the thing is, I think it's always better to wait until we can see it's very obvious that the market wants to go more lower or more up. And you see how the market continues to go more lower. I think it's not good to expect that the market is going up, because you see here a lot of market pressure down. And then first, once we can see like literally that the market starts to press higher, here you see how the market is not reaching the high. If it would reach this high here, for example, and then it will try to pass through. This is where I think is then the area to start trading to this high, or then to the biggest structure high. And then sometimes the market will break out, and then we have a nice winning trade. But a couple of times also the market will just come back. And when we find our entry here, what I just said, then we can even exit our trading position without losing any money, because we are entering where we have momentum, where we have a trend. And as you see here, I told you 3 things. The first one is where the market is consolidating and trending. And right now it's consolidating and trending down, as you see here, aiming for these lows here, as you see here. Then you see also that the market is doing lower highs here, and the market cannot reach here those highs, not even the smaller structure high, what is very interesting. And currently the market is in number 3 inside. That means you have number 1, trending, number 1, consolidating, trending. Number 3 is that it's more consolidating, and when it's too much consolidating, very hard to trade. This is where most losing trade happens. I hope you can see this live on the charts.